In today's Money Watch, we are talking about the government's latest move on the economy. The Federal Reserve decided to hold interest rates steady yesterday after raising rates 11 times in the past year and a half to fight inflation. Meanwhile, the United Auto Workers strike against the big three automakers is in its sixth day with about 13,000 workers on the picket line. Yesterday, General Motors and Stellantis announced new layoffs that they blame on the strike. CBS News business analyst Jill Schlesinger is here to break it all down like boxes on recycling day. How are you doing?
I'm doing well.
All right, let's jump right into it. So the Federal Reserve, why did they decide to keep interest rates the same and steady this
They
way?
basically believe the economy is expanding at a pretty solid pace, that the employment landscape is good, and they are encouraged by the most general categories of inflation coming down. So as a result, they kind of are saying, we're not going to take a pause right now. We may raise them in the future, but for today, we're good, and that was it. So we're still, though, at a 22-year high in short-term interest rates, 5.25% to 5.5%. Borrowers, you better get used to it. This is going to be sticking around for a while.
And what does it mean for inflation? I know their goal is to get it down to 2%.
Yeah, I mean, they've made great progress, if you think about it. In the summer of 22, we reached a peak of the consumer price index, 9.1%. It was horrible, right? We're now down to 3.7% on an annualized basis. But the Fed does target 2%. They think that's the right pace for the economy to grow, to create jobs, and for workers to be okay with their take-home pay. Well, I'll tell you what's going to be hard for the Fed. Going from this current level of 3.7 to 2%. This last 1.7% is going to be difficult for them.
You keep hearing people complain about the cost of things, but then you hear about how inflation is supposedly going down. Is that number, does that include gas prices and like eggs and milk and stuff?
Yes. So that top line number, 3.7, is inclusive of everything. The Fed does like to look at the core level. It strips away food and energy because those are such volatile categories. Like gas prices are up really enormously over the last few months because Russia and Saudi Arabia cut production. So when we take that out of it, the general rate of the core inflation is driving lower, and that is good news.
Super interesting.
Let's go to the United Auto Workers strike for just a second, because I've heard you say they have more leverage now than they did back in 2019. How is that possible?
Well, it's interesting because when you look at what's happened to the labor market amid the pandemic, things really blew out, right? So first we were worried about automakers surviving. Then there was a surge of people who wanted cars. And when you look back to the last contract in 2019, don't forget, they negotiated that contract when it was 2% inflation. Now, both the automakers and the union members know inflation, prices, they're up by 20% from 2019. So just to get them to like the fair level today, they've got to get a 20% increase. I also think that the union understands it's a tight labor market still. And it is important for these automakers to keep these people on the job because they've got to be competitive in the global market with electric vehicles.
And we're seeing so many strikes now, Jill. The writers, hopefully that'll work out today. The actors, and now, why do you think...
Saw Amazon earlier this year, threat of UPS.
Almost, yeah.
Well,
right.
a couple of things that
What's
are
happening?
interesting. What's happening is that a tight labor market does make unionization more appealing. The public is actually more accepting of unions. But when you look at the raw numbers, we look at the number of workers who were in a union back in 1983, it was 20% of workers. And now it's 10%. If you look at private sector, so you pull government out, that number was 17% in 1983. It's 6% now. So union membership is on a broad, multi-decade decline.
Wow, very interesting. Jill, thank you very much.
Thank you.
Appreciate you being here.